.1 hours ago, Donald Trump stepped onto that podium and dropped what sounded like the headline the world had been waiting for: a 2-week ceasefire with Iran. The bombs were supposed to stop. The Strait of Hormuz was supposed to reopen. 40 days of chaos finally coming to an end. And just like that, Wall Street exhaled. Oil plunged 10% in minutes. Stock futures ripped higher. Every major outlet, especially CNBC, echoed the same message: peace is here. The crisis is over. But then, something didn't follow the script. Gold didn't fall. It surged 3%. Silver didn't stabilize. It exploded 7% to a 3-week high. And while the media celebrated the end of war, China quietly added another 500,000 ounces of gold to its reserves. Think about that for a second. Because if this were truly peace, none of this should be happening. When fear disappears, safe haven assets are supposed to get dumped. When peace is declared, you rotate out of gold and into risk. That's the rule. That's the playbook. So explain this: why are the biggest players on the planet doing the exact opposite? Because they're seeing something you're not. Something the headlines won't tell you. Something that completely rewrites what happens next. This ceasefire, it's not peace. It's a setup, a trap, and the charts I'm about to show you will make that crystal clear. Why gold and silver aren't topping out, but preparing for the most aggressive move of this entire bull cycle. Welcome to the hidden economy. And before we go any further, hit subscribe, hit like, because what you're about to see could fundamentally change how you think about your money over the next 12 months. Let's get straight to it, because what actually happened in the last 24 hours is not what you're being told. Donald Trump didn't announce peace. He announced a 14-day pause with Iran. Not a treaty, not an end to war. Just a temporary halt. In exchange, limited access through the Strait of Hormuz. Talks scheduled in Islamabad. Markets reacted instantly. Oil dropped over 10%. The dollar slipped. Stocks surged in what looked like relief. But then the signal broke. Gold jumped 3%. Silver spiked nearly 7%. That's not how peace behaves. Because smart money isn't buying the headline, they're reading what comes next. Look at Iran's actual demands: full control of Hormuz traffic, total U.S. military withdrawal, complete sanction removal, financial compensation, asset releases, and continued uranium enrichment. Let me be clear. There is zero chance those terms get accepted. This isn't negotiation. It's a setup designed to fail, and the market knows it. That 2-week deadline? It's not certainty. It's a ticking clock. Taco, that's what traders are calling it now. Trump always chickens out. Threaten destruction, extend the deadline, claim progress, repeat. We've seen this pattern over and over. So what happens in 2 weeks when talks collapse? When Iran refuses to give up control of the Strait of Hormuz, when Donald Trump runs out of patience again. Oil spikes. Fear returns. And everyone who sold gold on peace scrambles back in at higher prices. Smart money doesn't wait for that moment. They position before it. Now here's what most people completely missed. China just increased its gold reserves again, now over 74 million ounces. But the real story: over the last 6 years, China has slashed its holdings of U.S. treasuries by over $400 billion, while steadily accumulating gold. That shift accelerated after Russia-Ukraine conflict 2022, when Western powers froze Russian reserves. China saw it and made a decision: never be vulnerable to that system. So they're dumping dollar-based assets and moving into physical gold. And they're not alone. Central banks worldwide are doing the same. Not retail investors, not YouTube traders. The biggest, most informed players on earth, quietly preparing for something most people still don't see. And here's the part every major player seems to agree on. The era of dollar dominance is fading, and gold is the ultimate hedge. Now let me show you the chart that changed everything for me. Since Richard Nixon closed the gold window in 1971, gold has gone through 3 major bull phases. We are now in the third, and potentially the most explosive. Phase 1 peaked in 1980 at $850. Phase 2 topped around $1,900 in 2011, each followed by long, brutal consolidations. And now, gold has broken out of a massive multi-decade cup and handle formation, a structure that took over 10 years to build. It's now riding a parabolic curve tracked by analyst Grady. As long as price stays above that curve, the path of least resistance is up. Aggressively. Look at where that curve leads: 2026, 2027, 2028, accelerating exponentially. Not linear growth. A vertical move, $5,000, $6,000, even $7,000 plus is no longer unthinkable. Because in every true bull market, there comes a moment when resistance stops mattering. Sellers disappear, buyers take full control, and based on the structure, stacked accumulations, higher breakouts, and strong support holds, we may be closer to that moment than anyone realizes. I'm not here to tell you what to do with your money, but I am here to tell you what the charts are screaming right now. In this setup, it shows up once, maybe twice in a lifetime. If gold impressed you, silver is on another level. This is a 40-year ratio, silver versus the Nasdaq 100. Back in 1990, silver outperformed. Then the dot-com era flipped everything. Tech exploded, silver collapsed, and the ratio hit historic lows. Now look at today. Silver has broken above a multi-year downtrend. RSI just confirmed the breakout. And if this move even partially mirrors history, silver could massively outperform tech, not by 30%, but potentially multiples higher. While everyone's watching Nvidia, Apple, and Microsoft, silver is quietly making its move. And here's the bigger picture. That ceasefire? It changes nothing. The real shift already happened when Russia had its reserves frozen in 2022. That's when the world realized the dollar can be weaponized. Now central banks are adapting, dumping treasuries, buying gold. Because gold isn't just a hedge, it's the only neutral reserve left. And that's why it rises, even when the headlines say it shouldn't. Gold was already on this path. The charts showed it. Central banks confirmed it. The war didn't create the trend, it just forced people to notice it. And now that they're looking, they're seeing what some of us have seen for years: a 53-year cycle reaching its climax, a third and final bull phase that could dwarf everything before it. A parabolic curve pointing to price levels most people can't even comprehend. That's why the ceasefire changes nothing. The market told you the truth. Gold didn't fall on peace, it surged. Silver didn't weaken, it exploded. Buyers are still in control. The breakout is still intact. Now here's how the next 2 weeks likely play out. Talks begin in Islamabad with optimism. Headlines talk about progress. Markets may drift higher on hope, but behind closed doors, the gap is unbridgeable. Iran won't give up control. The US won't concede core demands. By day 10 or 11, leaks hit, negotiations stall. Tension returns. Then comes the decision moment for Donald Trump. Extend or escalate? If escalation wins, oil spikes, the dollar slips, gold and silver surge to new highs. And if I'm wrong, even then, the structural bull case remains untouched. China is still de-dollarizing. Central banks are still buying. The 53-year cycle is still in motion, and silver is still breaking out against tech. Peace might slow this trend, but it won't stop it. Now let's talk numbers, because the upside here isn't small. Goldman Sachs sees gold at 5,400. JP Morgan Chase says above 5,000 USD. Targets 5,600 USD. And technical models point as high as $7,000. Silver? Even more explosive. Bank of America's Michael Widmer projects $135.309. Citigroup sees $150.170. Billions dollars. Now here's the key. These forecasts came before the latest surge in central bank buying, before gold hit new highs, before treasuries were aggressively sold. The fundamentals have only strengthened. Now about interest rates, most people get this wrong. Gold doesn't care about nominal rates. It cares about real rates, rates minus inflation. If you earn 4% but inflation is 6%, you're losing 2% in real terms. That's where gold thrives. And globally, central banks are trapped. Meanwhile, supply is tight. Gold can't be printed. Silver supply is constrained and tied to industrial demand. This isn't temporary. It's structural. We're already seeing silver shortages. Demand is outpacing supply. Inventories are shrinking. At some point, the market has to price that scarcity in. And when it does, silver doesn't move slowly, it explodes. Remember 2011. Silver ran from $18 to nearly $50 in under a year, a 170% surge. Now look at today. Silver is breaking out against the NASDAQ 100, industrial demand is surging, and the setup is eerily similar. I'm not telling you to sell everything and buy metals. That's not responsible. But I am telling you this, setups like this are rare, once-in-a-lifetime rare. The evidence is everywhere. Central banks accumulating, China rotating out of treasuries into gold, a 53-year structure breaking higher, silver outperforming tech for the first time in years. Even the market's reaction to peace confirms it. Gold and silver refuse to fall. Here's the takeaway. The ceasefire is a pause, not peace. De-dollarization isn't reversing. The bull structure is intact, and silver. It may be the bigger opportunity. The real question isn't if this continues, it's whether you're positioned before the crowd wakes up.